the one thing I'd like to kind of touch back on is I know you guys discussed syndication earlier, and you've really become syndication experts from what I hear. How do you guys reach out and find capital? So it could be through syndication, I'm guessing, but it could also be through financing, long or short term. And how is that, or how are your methods going forward, particularly in this tight, high interest rate environment?
Sure. And great question. And it also does always go back to the math, right? And so even in a high interest rate environment, you can find deals, but it becomes even more prudent and important that your math works. And so you've got to see the ROI, you've got to see a reasonable return on that investment. And from a syndication standpoint, what we did is very similar to kind of what we were sharing earlier. Is we just went through LinkedIn, we started there and said, hey, who do we know, like, and trust, and who do we want to partner with that could be in this space with us? We just started making some phone calls. We created our pitch deck. We worked with our attorney to make sure we had our I's dotted and T's crossed, button up our language. And then what we also learned is there are all kinds of ways that you can structure deals. There's all kinds of ways that you can structure it. What matters is, do the investors believe in the outcome? Do they understand and see the direction you're taking, the syndication? And so what I mean by that is, for the listeners, is you'll see a lot of syndicated deals where they will offer a preferred return of some rate, or they may offer a split in the cash flow, or they offer some level of deferred, payout, or whatever it might be. It just depends on the investment. Well, what Mike and I learned, and we didn't know going in early, was that you don't have to structure something with a preferred return. You don't have to have that burden where you've got to hit a nut every quarter, right? You can structure something as a function of cash flow every quarter. You can structure something that's got a deferred mix. We can be flexible in terms of what that mix looks like. Depends on the size of the deal. And so, at least in our example, by going out to our network and talking to folks, and then we start asking the question, is there anybody else that you know? And it depends on how we're structured, right? So there's a difference whether we can advertise or not advertise. And if your listeners don't know that, make sure that they're talking to a qualified securities attorney and know the difference, right? So, so depending on which syndication we're talking about, we knew that we could either advertise or not advertise. And if we couldn't advertise, then it came down to who did we know and had an existing relationship with. But if we could advertise, then we started talking to folks and said, hey, who out there do you know that's interested in a passive investment that would want to work with people like us that have an interest in, to some degrees on a small scale, solving some of the affordable housing crisis that we have. And that became a really interesting niche for us. And when we use that language too, I think it really kind of hits for people, because that's what we're doing. When we're solving or keeping that opportunity available. Because the other part, and I don't want to get too philosophical here, Gordon, but the other thing that's interesting that's happening across America is a lot more mobile home parks every year are getting plowed under than are getting developed or redeveloped. And then the other side of that coin is there's also a bad rap from some private equity firms. They're coming in and buying the parks, and it's all about the numbers and the dollars and cents on a spreadsheet. And it's not about the firm, but they're taking up rents at a reasonable rate that's fair to people. And some of these developers or investors are jacking up lot rent rates and forcing people out because they don't care. It's about the money. It's about the math. And that's not our strategy, right? Our strategy is firm but fair, take it up over time, make it reasonable that people can live, and help maintain that opportunity in America for people to live and own their property and give them a leg up.
A change of pace from the Get Rich Quick gurus. Subscribe to the Real Finds podcast for in-depth conversations with voices shaping the real estate world.